We're now 2 months down in 2024. Bitcoin's had its second highest monthly close in history. We'll have a look at what that means in the market and looking forward through to March and the forward returns over the coming 6 months. Bitcoin has also had its largest dollar gain in history, now up 43% on the month. So we're starting out March pretty damn strong. So what does that mean for March? What does it mean for Bitcoin? What does it mean for the SP 500? We're also going to look at the bull market that is currently on and the data, the statistics here showing what we can expect for 2024 leading into 2025 as well. Guys, hit that like and subscribe. We are on our journey to 400,000 subscribers in 2024. We've been here all throughout the bear market, looking at how that bottom has formed, and we want to look at how the tops will come into play as well. Links in the video description for our sponsors on the channel, SwiftX, Bybit, BitGet. Check them out, use them, don't use them, it's entirely up to you. Guys, let's kick it off with being extremely bullish on the markets. Well, that's a little bit of a joke. I am bullish on the markets, but this is that phase now where you get hate for not being bullish enough. There's a lot of people that have come through late in the market, and this is going to continue on throughout the rest of the bull markets. So essentially, as I say, be cautious of the moves to the upside and have stops in play to the downside in case the market comes back against you. And of course, start to take profits as well. Bull markets don't last forever, but they can last a very significant time. As we're seeing with the sentiment flipping in the markets here, a lot of bullish sentiment. This is one of the highest bullish readings we've seen for some time. Weeks ending here throughout February, 49%, 42, 44, 46. So essentially every single week was more bullish than it was bearish. And this is the bearish statistics on this side. The historical average was much below where we saw the February readings come out. And in terms of the bearishness, there you are, 31% bearishness is the historical average. Now, in terms of the bull market for the S&P 500, this is one of the shortest bull markets in history. So far, it's a year and a third up. It's had a 40% increase from the bottom there, looking at the 12th of October using a closing price, not the exact price low. This is how they measure it in the financial markets. Now, in terms of the averages here, Seth, good friend of the channel here, COVID bull market was the shortest in history, looking at it in terms of time. So far, we are shorter than that. And so essentially, we're trying to figure out whether our theory of a bull market continuing on throughout 2024 without this recession, without this fear of collapse in 2024, without some sort of blow off top coming in the first half of 2024 and then severe crash, seeing if that actually stacks up to the data that we have seen since World War II. Now, the average returns are 157% for a bull market. Of course, that's an average. It could be lower, it could be higher. You can see here that the averages from these particular bull markets, 86, 80, 48, 73, you get the idea. And then there have been some massive ones through the 90s and the mid 2000s, from 2009 onwards. We had a 400% increase from that time. And so if there was the possibility of the market crashing in 2024, it would have to break basically all of these records and be one of the shortest bull runs in history. It's not impossible. I just don't like stacking those particular odds against myself in this bull market, especially when we are roughly here in the 18.6 year cycle, heading up into this blow off peak, which could last a little longer than many are anticipating. So that's some pretty damning evidence looking at the extent or the length of the bull markets. You can see here in terms of days, months, years, and then the price range as well. So that's pretty good news moving forward into 2024 and 2025 for further macro upside. There will be corrections along the way. That's typical. But when you start to look at the corrections that occur after the market runs into a new all-time high, they're few and far between when they're multi-month corrections. You can see we had a significant one here in 2015, but the market was running up pretty damn strong since 2011, the 2011 low, the breakout in 2013. And then throughout that period, over the next year and a half, 2 years, you basically only saw single month corrections in terms of the price itself. And in terms of even just the swing chart, there's really only maybe 1 to 2 months of a swing chart before you finally got a significant correction. And then when we're looking at that significant correction, the price itself, or the percentage drop, was only roughly 15.5%. Market then went on again. You had a few months here that were red, but essentially flat, 0.1% negative, 0.5% negative, 1.4% negative. Total move from that period to the downside, 7.44% over the period of roughly 3 months. And then again, green, 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 flat, green, 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 all the way up to the top. 2018 comes along, again, correction up into that next peak for 2019, early 2020. And then again, away she runs. And so the reason for looking at that is once we start to break into these new all-time highs, typically what we've seen at least over the last 15 or so years, green, 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 all the way up. Now we can continue, we can take that a little further, go look at the Dow Jones as well. It's got a lot more history here. Again, once it broke out from the 1987 Black Friday, Black Monday drop here, you can see that there was not too much going on. You had the recession in the 89, 90, and then single red month corrections along the way up to the bull market top of the dot-com bubble. That's where things started to get a little more serious to the downside. So in terms of historical events here, once we start to break into new all-time highs, there is quite a significant period where it can keep grinding up higher and higher. This is my way of saying I am very, very bullish. I'm cautious now because the lows are in. The lows are the easiest times to be getting into the market. That's why I very strongly suggest staying with the market. Whether you follow on the channel here or somewhere else, just stay with the market throughout the bull and the bear, and you'll get a feeling, you'll get an understanding of how those lows begin to form. If you want to stay here, hit that subscribe button. You'll get updated. That's your reminder for the thumbs up as well. So on to Bitcoin. Let's look at March. Let's look at some more of that data. Quick news piece here. We see lots on the ETFs. We see lots on halving. Now we're seeing crypto rumors of Jeff Bezos sold $8.5 billion in Amazon stock to buy Bitcoin. If you were new to cryptocurrency, this type of shit turns up throughout the bull markets. It's basically entirely speculative. There is absolutely no proof that Jeff sold his $8.5 billion in Amazon stock to buy Bitcoin. And of course, it could all be true. It could definitely all be true. But this is the sort of thing that we see every single bull market. I was here in 2017. We saw the same sort of nonsense back then. If you were here in 2020, 2021, you know you've seen that same sort of nonsense back then. And they're trying to pull all these different pieces of the puzzle together to give you some sort of bullish hopium. Hey, I love it. If people get excited for it in a bull market and it starts to push more price up and people get FOMO, that's going to be great for everyone that's still holding, whether you're holding Bitcoin, ETH, altcoins. I was going to say stable coins. That's not going to help you in that case. But if you're holding anything and you see these sorts of ridiculous rumors, which are based on nothing but a tweet by someone, and it pushes price up, well, it's kind of like Dogecoin and the Elon Musk tweet days. So is Michael Saylor going to talk the ear off Jeff Bezos and tell him to get into Bitcoin? We can all hope so. Let's see if that plays out over the coming weeks. And we can circle back to this and say, well, this big pump up bar of 43%, $18,500 in February being the biggest month in history. Well, maybe it was all Jeff Bezos buying. Maybe he's buying some of Michael Saylor's bags because he has got a lot. He's got a big, big bag there. So onto Bitcoin and looking at the timeframes as we approach a new all-time high. What we were looking at yesterday was the possibility of Bitcoin closing at its highest monthly close in history. So something that hadn't happened in history before, waiting for this thing to close at its highest monthly close in history. It fell short by about $160. It closed at $61,166. The previous highest close was October 2021 at $61,357. So it could do it this month. We'll wait and see. It probably doesn't mean that the market is going to collapse from this point. I think most of us can establish that by now. It's been a very strong, healthy uptrend. The thing I want to note here is the length of the move from the all-time high to the highest monthly close after the old all-time high. So for example, the previous cycle, 2017, monthly close here, 13,888. If you're Asian, you must love that number there. I definitely do. I love the 888s. 13,888. And then we got the close in October 2020 at 13,800 and call it $10. So there was 34 months from that top to that next monthly close, just slightly under. Next month powered on through, that was November, and then came up to test the all-time high price, followed by December breaking through the all-time high price, and away she goes from that point. So that was 34 months. Go back a cycle prior, you had 39 months from the all-time highest close, 1205, and then it took 39 months till February 2017 to get to 1190. So 1205, 1190, next month was down. So basically it came up to test it. Next month pulled back. Following that, you had April 2017, push higher, higher close, $1,362, and away she goes from that point. So this time around, we're at 28 months. Didn't happen this month. Maybe it happens next month. Bitcoin is roughly about 28, 29 months away from the all-time high closing price. Of course, the highest price, 69,000. The highest closing price is 61,358. That's the target to beat now. What we can note is that they're getting shorter periods to breaking through that old all-time high. Hold your horses. That does not mean cycles are shortening or lengthening. I had this bit of a discussion on Twitter with someone saying that they think the cycle is lengthening. Cycles don't lengthen, they don't shorten. This is just history. The world doesn't go through 300 days and then the next year goes through 400 days for a calendar year. It's 365 days in the case of a leap year, 366. And so you get some slight variances there, but you don't get a lengthening year. You don't get a lengthening winter or a lengthening summer. It's roughly around the same. Sometimes the heat lasts a little bit longer into autumn. Sometimes the cold lasts a little bit longer into spring, but essentially it all works itself out and you get roughly similar cycles over a long period of time. When we look at the 4-year cycle, as we have done here on the channel, looking at the left translated or the right translated cycle, that just tells you about the strength of the move. So 4-year cycles are low to low, not the halving, not anything else. It's low to low because that gives you a rough idea of the gauge. Looking at the strength of the cycle, where does that top come in? So in terms of what we have done, what the market has done, just data, just the facts here, not my opinion. Even though there was a longer period underneath the old all-time high, you still saw 10 months up. Very, very quick run to the upside. 10 months, tops in, game over. Next cycle was 34 months. So 34 months underneath that previous old highest monthly closing price. Market runs up fast, then spends a little longer in that all-time high territory, above the previous old all-time high, I should say. And that gave us 13 months above that previous resistance zone here, roughly October. Of course, November broke through and that was where the highest close was. But just having a look at the timeframes here, there was an extension of time above the previous old all-time high before the bear market kicks in and then market collapses from that point. So two things can happen. Market could run up here. We get a left translated cycle, comes back under, and then we spend a fair bit of time underneath these prices, underneath the previous old all-time high. That's going to be quite weak. A healthy correction and then a bounce away to close back above the old all-time high is still okay. So there's a couple of things there. I guess that's one thing and 1.5 on the options. But the next thing that could happen is that Bitcoin breaks above the old all-time high, then spends time above the old all-time high, consolidating before it runs away again from that point, bringing us somewhere into 2025. Maybe the first half, maybe the second half. I'm not sold on when the all-time high must come in yet. We still have a few more months to go to figure out what happens here. Do we start to break above and consolidate above? The reason I bring that up is that we've seen it with the SP 500. We see it with all sorts of markets. In terms of the S&P here, and this is a little bit of a joke that I put onto Twitter the other day, as it breaks above old all-time highs, you can see from here, it starts to run away from that point. Another good market to look at would be something like Germany. There's the old all-time high, broke above, took a fair bit of time to consolidate and has continued to break higher. It just put in a new all-time high again, and it's in a recession. Side note, okay, so markets can do that. They run up, break into new all-time highs, need time to consolidate, come back and retest the previous tops, and then move away from that point. France was also doing something very similar. A breakout into new all-time highs, come back, test the tops, break out into new all-time high, come back and test these previous tops. France also with shit flying all around Paris from the farmers, new all-time high territory again. So this is a sort of movement as an option for Bitcoin if we're to see it break out earlier. And you can see the pattern here. There was 39 months, 34 months. Maybe it happens this month in March. So it's shortening by 5 months to get to the breakout point. But in terms of the 4-year cycle, looking at low to low, so that 4-year doesn't change. You just get an idea of, is the top going to come in the weak side or the strong side of the timing of the cycle. It's no different to how we measure the price, where we look at the 50% level. Does price consolidate above the 50% level or below the 50% level? Below is weak, above is strong. Very, very simple when you break it down like that to give you an idea of more buyers coming into the market. Is demand picking up, or is supply starting to take hold? And if supply starts to take hold, well, you can guess what happens next. And if you can't guess, market goes down. So we got the March forward returns to have a look at. I want to end this part here with looking at the end of the cycle. There's a couple of counts. Now I've got August sitting here. So we've looked at roughly August, September, maybe even into October. So it sits around Q3, maybe just into Q4. Could this come a little earlier in 2025? For sure. Let's have a look at that data as it comes through. But the idea that it did, now this is starting to get a little bit more subjective here because we don't have enough data to form a solid opinion from this point, but we'll humor it anyway, looking at where it could continue to run. The idea, if it was to run above the old all-time high and to remain above the old all-time high and consolidate, even if it broke into a new all-time high early in that left part of the cycle, I would say provided it can hold above the previous old all-time high and then start to work its way higher, you'd probably then see a right translated cycle again. So it might seem weak at first because it's jumping into the all-time high territory on the left-hand side, but, and it's a massive, massive but, because we still need more data here, if it's able to hold above those levels, consolidate, and start to work its way higher, there is a higher chance that it would then put in another fresh high in the right-hand side of the 4-year cycle. That is something that we're going to continue to come back to because I think it's really important leading into this next stage of the move. Do we push into new all-time highs? Do we pull back from here? Let's have a look at what March has shown in the past using our TIA indicator forward returns table here. Now, this isn't available yet, but we are rolling this out over the coming months. So if you want to get notified when this comes out, link in the top of the video description, join the email list there. You'll get a free report every single week. But for now, let's have a look. March, looking at all of the data, excluding 2010 and 2024, because we don't have a reading for the March period there, and it's sort of limited. We're looking at March here. We have 13 data points, 6 wins, 7 losses. Now, it's the third weakest month of the year for Bitcoin. Now, the two weakest are August and September. Now, if I move my face out of the way here, we move it to the top. You can see that December isn't the greatest either at roughly 54%. Got balloons flying everywhere. And March being the third weakest there. So it doesn't mean that it has to be a red month. It's just the numbers are stacked against March being a red month, just looking at the monthly returns here. Now, we have seen 5 straight months up for BTC, and I've got Solana to get to for you guys as well, plus the 6 monthly forward returns. We're going to have a look at what happens for Bitcoin 6 months from now and 12 months from now as well. But just looking at the monthly swings for BTC, you can see that we've been up 5 months now using the swing chart here, again, swing indicator. Turn this particular tool on down the bottom, bar count, and leave it at 0. So you can count the number of bars to the upside, or in this case, candles. And so as we continue on with more and more green months to the upside, in the past, one of the biggest streaks Bitcoin has done is 10 months. So just looking at going out of the low into that first pullback of 2 months, 10 months with a sideways accumulation. So we haven't really seen that yet either. So if we take that one out of the mix, we haven't seen any sort of sideways accumulation. You've got 7 months, you've got 5 months into the peak, 6 months into the 2019 peak, 5 months out of the COVID bottom, 1 month pullback, 7 months into that first top before a massive 55% correction, and then 5 months into the old all-time high. So taking that 10 months out, essentially you've got 7, 5, 6, 5, 7, 5, I was about to say 6. It almost sounded like it should rhyme. So maybe we get something like that for March, push up, pull back down. You'd still get 6 months up. You would still get your red month, looking at March here being 46% return, a lot of reds through this area here. And the market would still be strong even if it did have that kind of pullback. Am I saying March is going to be red? Of course not. These are all probabilities. I'm not telling you that it has to be red. I'm just keeping a watch out for the extension of number of months straight to the upside. We're keeping a lookout for what has happened historically for Bitcoin, looking at it being a green or a red. But let's look a little further out than just 1 month. We're not here for the 1 month gains. We're here for the longer gains. So 6 month returns, looking at March through to August. Historically, it's been one of the best 6 month periods. 69.23%. You got a few red 6 month periods here. Of course, 2022, that is your bear market year, another bear market year, another bear market year. So without the bear market years, you had a negative 10% in 2015. That was the cycle bottom where Bitcoin was moving around the lows, and then you got that nice big break to the upside. So that 6 month period looks relatively good. If we turn these back on, have a look at January, 71% move if you're buying in January and selling at the end of June. You've got a 78% February to July. You're at a 69%, not too bad, but not as good as February, of course. And February has shown that so far. We had a massive move to the upside for February. If that continues on and it doesn't come back, well, that's just going to add to the number down here. In terms of April, not the greatest time. Buying in April and holding until September for that 6 months, almost a 50-50 chance there of making a profit. May to October, sell in May and go away. It doesn't seem to be that case for BTC. It's at 69%. June to November, 61. So the March period isn't such a bad time either. It still has a much higher percentage. Not as great as some of the other months like buying in February or buying in December at 71%. But nonetheless, it's still up around that 69-70%. So not the worst readings here. In terms of 12 months, buying today and selling at the end of February, it's about a 69% return. So very similar to that 6 month period. If we take out the bear years again, 2014, 18, and 2022, you just have one loss there of 2021. So right up at that peak of the bull market, just negative 4%. But let's move on to Solana and some of these cryptos, which have also started to move to the upside. Now I'm focusing on the BTC charts. As we were watching Solana BTC, it had its move almost dead onto that 50% level, back down at roughly 178,000 Satoshis. That was the failure. And the strength in that move is that it failed underneath and then in 2 days sprung back above, closed above it, high volume, and today is even showing more strength. So what you want to see from here is a continuation of the move and a close, at least a close above the previous top, but a higher close on the bar. If this is a short-term move up and a fall back down with a close, that was all just a fake out to the upside. So far it's looking good. It's looking like some of these cryptos, especially Solana here now up at 8% against its BTC value, and against USD it's at 8.5%, pushing to new fresh highs. Provided it can stay above the 50% level, that is going to be a much stronger cryptocurrency. This thing has been on a pretty solid tear, and here it is for you guys. Listen once, as I said with other times, I'm only going to say it once. This one has shocked me. Solana has done a very, very significant move to the upside here. That's okay. There's plenty more out there. That's the way I trade. If Solana is on your table and you've managed to scoop up a ton of it, good luck to you. Make those gains and move on. If you've missed out, it doesn't matter. It doesn't matter because there's thousands and thousands of cryptos that are all going to do similar types of returns. That's the beauty about the altcoin market. You can almost throw a dart at anything and make some significant gains. The problem that most people face is knowing when to sell out of the market. We've covered this before. We'll cover it again on the channel. I hope you found a ton of value from looking at Bitcoin and the stock markets, especially with these macro cycles at play, some of that significant data about the bull market ahead of us, or the potential bull market ahead of us, and of course our forward returns here on the monthly, 6 month and 12 months. Thanks again for your time and attention. Like and subscribe. 400,000. Let's go this year, 2024. See you in the next video. Till then, take care and peace out.